Hello, my good people. It's my hope that you are well and you are going on well. Welcome back to this space as we continue learning together. Yes. Now, on this video, basically, I'm going to repeat something that I had discussed sometimes back, and now that it's still on the rise. It's good to tujikumbushe kidogo. One of the investment vehicles in our financial system that has come to light of late is the money market funds. Like, you find a lot of people are getting interested in money market fund, or popularly known as MMFs. So anytime that I use the terms MMF, I am using that as a short form for money market funds. It is one of the investment vehicles that have come to the light in the recent past. And it is good to note that money market funds are not new investments at all. Money market funds have been there for quite a long time. It's just that watu hawakuwa wanajua, and it is good that people are embracing financial literacy slowly by slowly. They are getting to learn day by day. Yeah, ndo maana unapata vitu kama hizi sasa watu wameanza kujua, because it is not that it is something new that has come in. It is something that have been in existence, ni vile tu watu hawakuwa wanajua. So in this video, let's just have a definition and see some few aspects on matters money market funds, or what people popularly refer to as MMFs. So money market funds are basically an account that you get to open with a particular fund manager, and you deposit your funds there, and you get to earn interest in return. And there is a concept that I had used sometimes back to try define what a money market fund is in to a layman, and I think I can still try to use the same analogy. What happens is that we know that we have other investment vehicles in our financial system. That is, we have the treasury boards, we have the treasury bills, we have the fixed deposit account, we have the shares, we have all that. But you get to realize that there are some investment that have some minimum set amounts that it is the minimum amount that you can invest. For example, if you get interested in investing in treasury bonds, the minimum you can do is 50,000. Similarly, if you get interested in investing in treasury bills, also the minimum that you can do is 50,000. And when you also go to the world of fixed deposit account that are given by the bank, you find that there is also a set minimum amount, sana 50,000. And also you find that if you have the small amount when it comes to fixed deposits, the interest is very, very, very minimal. You can confirm that with your commercial bank. So for fixed interest, for fixed deposit account, they work for someone with a relatively huge principal. Now, what happened? Does it mean someone who cannot afford the 50,000 at once, someone who cannot afford to open a fixed deposit account, cannot get to enjoy the benefits from these investments, such as the treasury bonds, the treasury bills, or something? No, that is not the case. Now, that is where money market fund comes in. So when I say a money market is like a big chama, so these people pull their efforts. Maybe from where I work, I can afford to save, let's say 200 bob on a daily basis. Then there's someone who is who is employed in formal employment, and they have a monthly salary, so they can afford to save 5,000 every month. So what happens is that all these funds are pulled together. Now you can imagine, now you're talking about 1 million people or so. So the fund that will be composed, it will be a very huge fund, that investments can be made to treasury boards, to treasury bills, to fixed deposits accounts in large quantities. Then the return from that is then shared to the individuals who contributed this money, uh, definitely guided by the amount that they contributed. So that's why I say that money market fund is like a very big chama that is coordinated by now the company offering the money market fund account. These accounts are majorly offered by banks and insurance companies. So it is that insurance company that is acting like a manager of that chama, taking funds from different people, investing the funds, getting to earn some returns. Of course, wanakata management fee yao because these are companies in business. They are not doing charity. So out of the returns that they get, they slash some management fee. Then the net interest is then redistributed back to those who contributed. So that is the basic concept of a money market fund. So basically, for a money market fund, you just open an account, you get to deposit your savings at whatever time that you wish, and you get to earn some interest. So we have a wide range of companies that provide the money market funds accounts. So it's upon you to choose the company that you would wish. And of course, in everything, in somewhere you think of channeling your hard earned cash. It is always good to do some due diligence. Usiingie na kampuni fulani alafu after several months sikia haipatikani, imezama. So right now we have maybe around 30 companies offering the services. You can get that information maybe from the websites, or the rates of money market funds are printed on a daily basis on the newspaper. Though in this digital era watu wa kusoma gazeti wako kidogo, but that is part of the areas where you can get the information regarding the money market fund. So you can get to have the paper and see the interest. I think right now the interests are somewhere between 14% and 18% per annum. The interest is 14% per annum. Now, it is clear to mention that a money market fund is not a get rich quick scam or get rich quick scheme. That's why the rate is within what is normal. It is within what is accepted as normal. 14% per annum, 15% per annum, 16% per annum. So it is not a get rich quick scheme. So usiingie pale na ile intention ya ati ama ile expectation ya your funds will double in 1 month, in 2 months. What money market funds do is that you get to earn some interest. Even if they don't add value so much to your money, they will ensure that the value of your money is not taken away by inflation. So it's not a get rich quick scheme, but it's somewhere that you can try and preserve your money. The other thing is that interest from money market fund is calculated on a daily basis. It is calculated on the basis of the amount of funds that is in your account by the end of that day. Then the net interest that the interest that have been calculated for the whole month, it is reinvested back to your account, and it becomes part of your principal in the next month. Let's say you have 100,000 in your money market fund account. maybe the interest of that will maybe come to around 1,000 and something per month. You see, it is not much. Now, if you get to earn that interest in January and you had a principal of 100, you get an interest of 1,300. So your principal for the month of February will be 100,000, 101,300. So that is how money market funds works. So you get to enjoy what we call the compound of the principle of compounding, which is key when it comes to creating wealth and the whole concept of preserving the value of your money. You should try and focus on investment where your money gets to compound. That is, earn an interest. That interest become part of the principal. Earn an interest again. That interest become part of your principal. You'll be able to grow. Money market funds are also good in that they provide liquidity. I know different companies have different services with different terms and conditions, but what should be common across the board is that your money market fund should provide some liquidity. By liquidity, I mean that I need some cash to spend. Can I get it? That is what we call liquidity. So you find that majority of the money market fund, if your money is being sent to your M-Pesa, you'll be able to get that instantly. Or if you are getting your funds in a bank account, maybe 1, 2, 3 business days, you'll be able to get your money. So there is no restriction as to when you can withdraw your funds from a money market fund. So it comes with some element of liquidity. But it is good to note that a money market fund is one of the investment where you can start your financial freedom journey. Let me term it that way, because there is no much restriction onto the amounts that you need to save. Because when you say that you want to invest in treasury bonds and you don't have the 50,000, you might be discouraged that before ufikishe hiyo 50,000 unakuwa umelose focus tena. You see, hii maisha hatukuangi focus kila wakati. We are on and off. Sometimes you sit down and try to figure out your life, and you see like you are okay, you have figured out everything, but come 2-3 days you are in another confusion, hata hujui penye uko. So you might say that I'll start saving, but unasema mi nataka kuanza kuinvest na treasury bonds, but treasury bonds need you to have 50,000, and maybe you are not able to get that 50,000 in a single transaction. So what you keep saying is you just keep promising yourself that you'll start. But now here comes a solution that you can be able to invest any amount that you have, the smallest amount that you can. There are some money market funds with a restriction of maybe 1,000 bob as the minimum deposit that you can do. But there are others where you can deposit any amount. There is no restriction to the minimum amount. So a money market fund is a good starting point with no much restriction. It is something that you decide to do today. Even if you have 100 bob, start with putting that 100 bob. Now that it is better than having nothing. So it's not something that will make you rich, but it can be a good starting point. So if you have any question on matters money market funds, you can drop your question at the comment section and we get to react to it. Tuzidi kuelimishana.